What will happen to XLE stock during a Trump administration? The bond market's are already showing that there is concern about more inflation given some of the policies that will be at play with a Trump administration, namely the deficit that will be created by extending the Trump era tax cuts from Trump's first presidency. Bond yields have been moving higher since the election. What will happen to the price of oil during this period of time? Now, we don't look like we're going to be entering a recession, but I wanted to break down a few things. Take a look at XLE stock itself because it continues to move higher and higher and higher despite oil, natural gas, and gas futures remaining fairly flatline. Let's jump in. I want to break a few things down, what to focus on to better understand XLE stock moving forward over the course of the next 4 years. Here's a look at the chart on XLE stock. This is actually a weekly chart going back to 2019, the past 5 years. You can see the big drop down when COVID hit. The big concern, of course, was there was so much supply. Ships didn't even have, they weren't allowed imports because there was nowhere to put a lot of these oils. So they were literally storing oil inside ships. Since then, of course, supply has moderated in matching more demand, and of course now we're in a more normalized economy. XLE stock looks like it wants to keep going higher. Now let's compare. This is XLE stock versus oil futures, gas futures, and natural gas. Same period of time, and as you can see, there's been some increase annually, almost 100% for XLE stock during this period of time. Remember, this is start of 19 or towards the end of 2019 before that big drop. Now, of course, had you bought into that big drop at that time, that would have been an enormous move higher. Not many of us did. I wasn't really trading that particular thing at that moment. I was more betting on the United States, broadly speaking, when it comes back to 2020, March 2020, when we saw the big sell-offs. So here's what we're looking at. Oil futures, gas futures, and natural gas have been remaining fairly flatline lately. And I've got more charts on that in the future. But what I wanted to take a look at is this is the U.S. 10-year Treasury. All right, the yield on the Treasury. You can see that Treasuries since September, when there was a pretty good feeling that Trump was going to win, Treasury yields moved higher. This is sort of the big X factor, if you will, and this is something that's going to play into the entire economy, which would affect the price of oil, the economy itself, and therefore XLE stock. All right, so what's going to happen? First, inflation. All right, let's talk about the tax cuts to corporations. Now, corporations provide about 9% of the tax revenue taken in by the U.S. federal government. Citizens pay about 45% of tax revenue coming in. So what's happening is corporations are paying less in taxes. This means there's a deficit, more deficit over the past several years. They expected it was probably about $1.5 to $2 trillion excess deficit because of the tax cuts. Moving forward, when these tax cuts get extended, I've seen numbers as high as $4.5 trillion over the course of the following 5 years for that tax credit. Then, of course, if another Republican comes in, more than likely, maybe they extend that even further or other kinds of cuts. So all this excess debt or deficit is pushing yields higher, because what has to happen is the federal government has to lower its price in order to dump this more excess supply. So how far could the 10-year go? Now, we're still sub 5%. It barely hit 5% back in 2023. I could see 5% happening. And this affects the entire economy, which would affect, of course, demand on oil. With higher interest rates, this acts as a tax on finite incomes. Whereas previously we kind of felt like there was going to be a different president moving into 2025, with the Federal Reserve lowering interest rates, now all of a sudden we're looking at more deficit, which would push interest rates higher. I don't think we're going to see 5 to 6%. We could. This taxes the overall economy, meaning there's less demand, aggregate demand for the economy. Oil prices would likely move lower. But here's the flip side to that. Oil producers, OPEC, Russia, the United States, are simply going to lower supply somewhat to meet this. And here's another chart. This is the U.S. Treasury yield, the yield curve. One thing that's odd that has happened is the yield curve was kind of crooked, more crooked. There was a big dip right in the center there. It's starting to get more flatline because what's happening is the long-term yield is moving higher. So a lot of this is actually being pushed out toward the long end with interest rates. What will the Federal Reserve do? The Federal Reserve, we just got inflation data last week, and inflation is inching higher. Again, could be a one-off. We had some, the hurricanes hitting out east may have affected prices and things of that nature. We'll see how that plays out. In the meantime, the Federal Reserve is pausing lowering interest rates, so the front end of the yield curve is still elevated. Will we see tariffs? Now, he said he's coming in and he's basically just going to get his pen out and get busy. I don't think so. I don't think he's going to do it the way he's going to do it. It may be a gradual process if he actually gets there. He'll want to make some kind of deal because he believes himself to be a deal maker. So given that angle, he may not just walk in and just start writing a pen and raising tariffs left and right. He may approach these trade partners and say, this is what we need. Give me a deal or I'll put up tariffs. That would create a tariff war, which, of course, if you looked at any of the papers, the studies that have been done by economists on that, it acted as one of the biggest taxes on U.S. consumers, the previous tariffs, in decades. Make no mistake about it. We're already paying tariffs right now. It's a nominal amount, less than 1%. Just for administrative costs at the ports. What happens is if you increase that, we'll still pay that, U.S. consumers. It doesn't get passed on to anybody else except the consumer. So this raises prices across the board. The Federal Reserve is going to have a very interesting time kind of try and balance the deficit that we're going to see extended, increasing deficit, while at the same time potentially tariffs. I don't know that we're going to see them right away. We'll see how that plays out. But the economy really does play into all these angles. Because if you do see tariffs the way they are being played out, XLE stock may see a decline simply because there's going to be less goods being moved around the country. We'll see moderation from OPEC with regard to supply, which could prop price upward, but that may take some time. If we do see a dip like what is potentially going to happen, I may be buying. Now here is oil futures themselves. And this is it's at a really interesting point right now. Back in 2020, of course, we saw the big drop down in oil prices. And I think this is a 1 week chart going all the way back to 2018, actually. We seem to be at a price point over the past year and a half where there's equilibrium. Price hasn't moved too terribly much. So given supply and demand, we've met some kind of equilibrium price. There's a lot more tension going to happen in Ukraine. But with a Trump presidency, maybe that tension goes away entirely. All of a sudden, any sort of risk factor in oil prices evaporates real quick. If there's any kind of resolution there, the sanctions versus Russia are likely to go away very quickly, which means the price of oil could drop lower given this Trump presidency. So XLE stock right now, where it's sitting, it is at an interesting point, but geopolitically, there's a lot of forces that could push the price of oil down given a Trump presidency. XLE stock could sell off given where we are right now moving into the next year. Let's see how that plays out. In the meantime, here's a look at XLE stock again. We may be at the high point given also what's going on with the economy. With XLE stock, if oil prices move lower, XLE will follow suit somewhat. We may see the 70 handle, sub 70, maybe 65 being printed because of the price of oil moving downward, renormalization with Russia given a Trump presidency. But at the same time, if we also see tariffs across the board, this would affect demand, aggregate demand here in the United States, which would slow down. XLE stock could easily be moving lower. And these are the sort of the things I'm kind of looking at. And as I shift going into 2025 with the stock market and what I believe is going to happen, we could easily see a big dramatic shift in a lot of the fundamental sort of pricing of what's going on given a Trump presidency. What is he going to do about Russia? That is a huge thing. The risk factor gets taken away. All of a sudden, Russia can now start trading more normalized. I don't know that Europe is going to normalize their relationships, but there may be some deal off into the future with Ukraine. Again, Europe, not sure what they're going to, what position they'll take. It is their backyard, so they may be a little more standing their ground. We'll see how that plays out. Fundamentally, what I see XLE at this point, at a high point, given such a huge shift that's about to take place. The economy, if we see tariffs, will slow down. With inflation moving as high as it is just last week, the Federal Reserve is not going to be able to lower interest rates like they've wanted to. That will be a big factor to take into place. Third, the Trump tax cuts will be extended. This is deficit, additional deficit, which of course is one of the reasons why we've seen the 10-year moving higher. This will tax the economy further beyond what we had been setting up for with the Federal Reserve lowering interest rates. So there's a lot of things happening. I'm going to continue to watch XLE stock. I believe XLE stock will likely move lower given the geopolitical situation we have now, with the economy likely to, with the Federal Reserve likely to keep interest rates higher and restrict economic growth so they can get that inflation number down below, closer to the 2%. Again, last week we saw the move upward in inflation. We're not getting to that 2% as fast as they wanted. This could affect XLE stock. We'll likely see it sell off over the course of the next, say, 3, 4, 6 months. I'd likely buy the dip at that point. I'm going to keep updated on this because it's something that XLE stock, given the continued economic growth we've been seeing, I think XLE stock has a lot of upside eventually. In the meantime, I think it sells off. Make sure to hit that like and follow button. We'll see you in the next video.